Going to do a little back testing of the strategy here using the 20 SMA, using that ATR risk to reward kind of ratio. So we had good numbers today. 5:30 in the morning, market absolutely exploded. We finished up today, over 300 points on the overall NASDAQ. Now, there was a point in time where the market was going a little bit sideways. That's because of the significant gap up in the pre-market. It kind of took everything to their upper supply zones. We did kind of just slowly grind higher. We had a couple of setups that were presented to us using the 20 SMA strategy. Now, one thing that I want to kind of point out here to you is if you would have looked at the first 20 SMA play, that did not come until 8:20 in the morning. So unless you were kind of chasing these new highs off of those numbers this morning, you really didn't have a clear setup. Now, one thing that I do kind of want to point out, especially for some of the newer traders in the room, especially for some of the newer people in Evolution Traders. By the way, guys, if you guys do want to join Evolution Traders, get access to that live trading, my courses, one-on-one mentorship, that link is down in the description box below. But if you're relatively new to trading or relatively new to trying to become profitable and trying to find your feet and trying to get, established as a trader, you really did not have a clear setup unless you were kind of chasing those new highs. Now, if you're going to follow a strategy, follow some type of edge in the market, you need to allow your edge to kind of play out. Now, again, most people are going to be very upset that they didn't catch the move. Most people are going to try to force trades. Most people are going to try to overtrade just to try to make what everyone else claims online that they're making. Realistically, we did not get our first setup until 8:20 in the morning. And if I kind of just scroll down here a little bit and look at the ATR at around this time where this 20 SMA setup, it was around 21 points. So if you wanted to give yourself that 2x ATR stop loss, you would have been looking at somewhere around a 42 point stop loss. So if you're playing 1 micro contracts, that's around $80. If you're playing 2, it's around 160. 3, so forth and so forth, right? So again, let's just stick with the narrative that we're playing 1 or 2 micro contracts. We're going to give ourselves a 42 point stop loss. We're going to go ahead and draw our box here. So our entry candle confirmation, we're going to take this from a price of 62, okay, 862, and we're going to go up 40 points. So 72 would be 10 points, 82 would be 20 points, 92 would be 30 points, and 102 would be our 40 point stop loss. So if you kind of just take this box and you drag it across just so you can see where your stop loss would have been, if we would have broken out to the high side, would have put in a new high of day. So that also kind of matches up with a great little stop loss there. And you can do one of two things. If you're looking to scalp, maybe you just want to get that 21 points, that ATR, that one ATR on a 5-minute time frame. So you would try to be targeting 20 points. If you're trying to get the full 40, that's going to be a little bit more of a difficult trade. Again, that would be a true 1-to-1 as far as risk to reward ratio. But in this particular case, you probably wouldn't have got that 40 points to the downside, but we're going to go ahead and kind of do the math anyways and kind of see. So if we do the math from our entry here at around 860, we're going to go to 850, which is 10 points. 40 is 20 points. 30 is 30 points. And 20 is 40 points. So if we kind of drag this box around down to the 20s, you can see that you might have hit it depending on where you put that take profit. So was it a full 1-to-1? Maybe, but it also may have been shy by a point depending on where you got in. So here's kind of what I'm telling my traders. Here's kind of what I'm doing in my trading strategy as well. Is if the ATR, I'm willing to give up 42 points, and let's say instead of trying to target that full 42 points, let's just cut it in half, right? Not in half, but let's just cut it down by 20%. So instead of maybe trying to get the full 42 points, let's just kind of take 10 points off of that. And let's just try to get 30 points. So if we're looking for 40 points on the ATR, let's go for 30. If we're looking for 20 points on the ATR, let's go to 15, 16. but we're going to keep our stop loss the same. We can also do something like this. You can also do a 1-to-1 on the ATR on the actual 5 minutes. So if, I hope you guys are kind of sticking with me. If the 820 candlestick here is sitting at around 21, 22, then maybe we just give ourselves 21, 22 points, right? Maybe let's call it 25 points, right? Let's round up a little bit just in case, you get some of those stops that like to get run sometimes. So if the ATR is 21, 22 points, let's just go a clear 25 points. And if we were to do that particular situation from 62, 72, 82, let's just go to like 87, 88. You can see here that maybe you would have got stopped out here, but you also would have been able to take profits a lot sooner than that. So if we just kind of take it to 25 points, you can see here that if you target that true 1-to-1, you would have made money. Now, again, if you want to do a 1-bar stop, you would have been stopped out here, but then you would have got another opportunity. So again, for me right now, with the way that the market is running, I would rather just, instead of using the 1-bar stop system, I would like to just use the ATRs. I've been using the ATRs a lot more. So again, if our ATR is sitting at 21 points, I'm going to give myself a 25 point stop loss, and I'm going to try to target 20 to 25 points. A clear 1-to-1. And as soon as that trade fires and it hits, I'm going to get out of the trade and I'm going to wait for the next setup. Your next long setup would have been here, right? Your next long setup would have been here. And if we kind of look at the ATR at this point in time at 9:35, you would see that the ATR was sitting around 16 points. So if we were targeting 16 points here from 62 to 72, 78, you would have also made money on this one, and your stop would have been here. Okay, so you would have made money on your take profit at a 1-to-1 ATR at the current ATR at that point in time. Again, it did break down, but you would have already been out of this trade. Now, again, here's where it gets sticky, because a lot of traders will get into the trade. They'll be up that 1-to-1, and then they'll look for more, because they'll start to look over to the left and they'll see, hey, the day's highs are here. This market can break out and go higher. So what happens is they tend to hold past that 1-to-1, and then they don't have an actionable plan when to get out, and then they give all the profits back, and then they get stopped out for a big loss, right? So if you kind of just take your strategy, take the ATR and target the 1-to-1, you're going to have a higher success rate. You're going to have a higher hit rate, and you're going to be more profitable on the day. And again, start slow in the beginning, trade 1 or 2 contracts at a time. And as you start to get familiar with the system, and as you start to get more comfortable and more profitable with the system, you go to 3 contracts, 4 contracts, 5 contracts, until we can scale all the way up until we get into 1 mini contract. But again, if you're trading on a prop firm, I would definitely kind of keep that position sizing, especially if you're on a $50,000 account for a prop firm, keep it to around 5 micro contracts. If you're trading $100,000 or $150,000 account, you got more room for margin of error. You can definitely get up to 1 mini contract on $100,000 or $150,000. So if you do desperately want to trade a mini and you want to trade those mini contracts, make sure you have a $100,000 or $150,000 account. If you have a $50,000 account, personally, and this is just my opinion, I would max that at 5 micro contracts. Okay, so again, we're going to scale from 1 to 2, 2 to 3, 3 to 4 to 5 on a $50,000 account, and we're going to stay there. And then if we're on a $100,000 or $150,000 account, we're going to scale all the way up to 1 mini, to 2 minis, to 3 minis, to 4, 5, 6, 7, 8, 9, 10. When we get to 10, we're going to sit at that 1 mini contract. Again, I would not recommend trading more than 1 mini contract, but to each his own. I hope this back testing video helps you guys. I'll see you guys all in the next one. If you guys do want to join Evolution Traders, that link is down in the description box below. Trade with me each and every single day live, ask your questions, schedule a mentorship coaching, get access to the community, as well as the watch list and intraday pivots and all the good stuff on the inside. And I'll see you guys all later.